Hi, it's Thomas Cook from Toronto's real estate team at RE/MAX Hallmark, and here is our July 2012 Toronto Real Estate Market Report. July's average sale price, as expected, was down from June, and the listing inventory decreased fractionally month over month. We're going to talk about what's special about the July market as we go through this month's report. So let's review some of the Toronto Real Estate Board statistics. July MLS sales totaled 7,570 houses and condominiums in all the districts. This sales number was down 1.5% from 1 year ago. Remember though, 2011 was the second best year in MLS history. But it was 6% above the average for July since the year 2000. 32% of the market sales were condo townhouses and high-rise suites, with 2,742 units changing hands during the month. The July average sale price came in at $476,947, up 3.9% from 1 year ago. East of Yonge and south of Bloor in the CO8 downtown Treb district, the condo sales price average increased to just over $391,000. While west of Yonge and CO1, the average dropped to just under $409,000. I'll give you more condo market details in just a few minutes. As you can see from this Toronto Real Estate Board monthly sales graph, July sales are down from 2011, but above the 2010 numbers, and came in as just above average historically for the month. These sales numbers are close to 450 homes above the July average over the past 11 years. I think 2012 will turn out to be having a traditional slower summer in terms of sales, with a moderate increase coming in the fall. The wild card is the effect the elimination of the 30-year mortgage financing option on July the 6th is having on the overall market, and especially the first-time market. The total listing inventory declined slightly this month, down 1.3% from June. There are two measures for tracking the Toronto Real Estate Board's listing inventory. One is new listings as shown here. They declined by almost 2,800 homes from June, although the overall inventory was roughly the same. This indicates that some homes were staying on the market longer. This slowdown is giving buyers a terrific window of opportunity, as houses and condos coming on the market offer more choices and fewer multiple offers, and we're seeing this already. The July average sale price of $476,947 was up almost 4% year over year. We're now seeing the traditional slowdown that we see most summers in July and August. The average price year to date is up almost 8% compared to the first 7 months of 2011. The sales to listings, or percent chance of selling ratio, is how we determine what type of market we're actually in. 24 to 28% is a neutral market, below 24% is a buyer's market, and above 28% is a seller's market. In July, that ratio dropped 9% to 37.3, continuing a decline since the market peak back in March. This number puts us just barely into a very moderate seller's market, a big shift since March, April, and May. Mortgages are very affordable, and the 5-year fixed-term rate is around the 3.1% mark. That means a monthly payment on a $100,000 mortgage with a 25-year amortization is just $475. The continued sad state of the European, American, and even the Chinese economy has had a downward influence on inflation expectations. Listing inventories have just about reached historic normals. July was off just 4% from the 2000 to 2011 average. This is the most normal we've been in the past 18 months. While the overall Treb average has lengthened slightly to 26, the days on market numbers for downtown condos east and west of Yonge were equal at 32. Detached homes across the GTA are selling in 21 days on average, and more affordable semis move in a speedy 17 days. As you can see from the graph, July's average sale price was again higher than July of last year, but was lower compared to June. My prediction is that the average sale price will remain below the $500,000 mark for the rest of the year. So far, the year-to-date average sale price is $498,582, which is up a reasonable 7.9% over the first 7 months of last year. We're certainly not seeing excessive price increases like Vancouver has seen in the recent past. Downtown Toronto condo market has slowed quite significantly in July. Downtown condo average sale prices were up just 0.6% year over year in CO1, west of Yonge and south of Bloor, and up just 2% in CO8, east of Yonge and south of Bloor, compared to 1 year ago. These low average sale price increase numbers could be partially explained by a 23% increase to 1,333 condo suites in inventory in CO1 compared to July of 2011, while listings in CO8 were up a significant 31% to just over 412 apartments. However, more significantly, the ratio of sales to listings in CO8 dropped into neutral market territory at 27.8%, while CO1 west of Yonge was in buyer market territory at 22%, and both of those numbers were down from June. Condo sales numbers in CO1 were lower by 24% from last year and down by 28% in CO8. So, what's your next best step if you're contemplating jumping into the Toronto market as a buyer? The best first step is to go on a market experience tour of condo or house neighborhoods. What it's not intended to do is to find you your dream home. What it is intended to do is to give you some idea of what's available on the market in your favorite parts of the city. Once you've had your tour, you'll be better able to make a smart decision as to whether now is the right time for you to buy. You can sign up for your condo tour at dailydowntowncondotours.com. That's dailydowntowncondotours.com. And a tour of houses at dailytorontohometours.com. That's dailytorontohometours.com. So, all the best, and check back here in early September for our August Toronto Real Estate Market Report.